At the beginning of this video, I want to ask you a few questions. Do you know how much wealth or income one needs in Australia to move up to the top tier of society? Can you guess how long it takes to become a millionaire here? If you're curious about the answers, make sure you watch until the end. Hi everyone, I'm Alison from Australia. My channel focuses on Australian lifestyle, personal finance, and real estate. I'm one of the few licensed professionals in Australia who holds qualifications in both accounting and law, while also working as a real estate agent. My team and I are committed to helping you build high-return, tax-efficient investment portfolios to fully protect your wealth. I'm also the author of Buying Property in Australia for Financial Freedom. Please note that everything I share here is based on personal opinion and does not constitute financial advice. If you're interested in one-on-one consultations, you can visit investwithalison.com and book a session that suits your schedule. According to UBS's Global Wealth Report 2023, Australia is home to nearly 2 million millionaires, while the US has over 20 million. However, not all of these millionaires are at the top of their industries or earning 6- or 7-figure salaries. In fact, most Australian millionaires are ordinary people. With some common sense and financial discipline, you can become a millionaire even with an average or slightly above average income. Last year, due to a weakened Australian dollar and a slowing economy, many wealthy Australians were impacted. Interestingly, this also lowered the barrier to entering the top 1% of wealth holders. Based on Knight Frank's 2024 wealth report, the wealth threshold to be in Australia's top 1% dropped from USD 5.5 million, AUD 8.41 million, to USD 4.67 million, around AUD 7.18 million. Before we dive into how to become wealthy in Australia, it's important to understand how wealth tiers are classified. The Australian Bureau of Statistics, ABS, divides households into quintiles, each representing 20% of the population. These categories are based on various factors such as income sources, disposable income, net worth, and wealth growth. For simplicity, I've translated these into 5 levels: lower, lower middle, middle, and upper class. One surprising finding is that being considered upper class doesn't require as much income or wealth as people often think. However, the higher your wealth tier, the more strategic your asset accumulation tends to be. For example, the lowest income group has an average disposable income of $54,134 Australian dollars, of which $26,051 comes from government welfare. Despite this support, their net income is still negative, at around AUD 5,769 annually. This group includes many university students or young people just starting out, often juggling part-time work and study. While income is limited, this stage is ideal for learning money management and developing resilience. With more experience and financial knowledge, most Australians in this group improve their financial standing, unless they choose not to work. Moving up to the lower middle class, we see a disposable income of 86,689 Australian dollars and modest savings of around $12,378. Families at this level often begin saving for a car or planning to buy a home. The middle class has an average disposable income of 117,500 Australian dollars, about $31,000 more than the lower middle class. However, their spending also increases by about $22,000, so the actual increase in net income is just $9,000. This demonstrates that income growth alone doesn't guarantee wealth. Expanding your income sources is more critical than merely cutting expenses. Many people rise from lower middle to middle class through career advancement. Others, who may have limited job progression, turn to freelancing for extra income, teaching piano, tutoring Mandarin, translating, or even cleaning. Popular freelancing platforms like Airtasker, Upwork, and Fiverr can help you monetize your skills and earn side income, sometimes even over $100 per hour. Assets among the middle class already average around 1.37 million Australian dollars, indicating a sharp jump from the previous tier. While the income gap between middle and lower middle classes is modest, the wealth gap is significant, primarily due to property. If your income is sufficient but your net assets haven't hit $1 million, don't stress. It likely means your property hasn't appreciated enough yet. Real estate value increases over time, so buying property early is key. Now, looking at the upper middle class, although their income and savings don't rise as sharply as before, their net assets surge. As mentioned, long-term property ownership leads to significant gains. For instance, a chart tracking Australian housing prices from March 2002 to March 2022 shows a 190.5% increase, despite events like the global financial crisis or the pandemic. That means if you invested $1 million Australian dollars in real estate in 2002, it would now be worth at least $1.9 million. You might wonder if you've missed the boat compared to those who entered the market 10 or 20 years earlier. Not necessarily. One of my clients bought a house in Perth for $580,000 Australian dollars last year, and it appreciated by 18.5% in just 1 year. If you time the market right, you can still catch up quickly by leveraging growth cycles. Long-term early entry into real estate almost always leads to double-digit gains. Finally, let's discuss the top tier. The average income for the upper class is $288,000 Australian dollars. While few professions can reach this level, those who do are usually specialists, surgeons, anesthetists, stock traders, and other high-earning professionals. However, even earning $288,000 doesn't automatically place you in the top tier. What matters more is how you manage your income and build your assets. If you're not earning a high salary, the key to joining the upper class lies in generating income through diversified investments. People who rely less on wages and focus more on creating passive income from investments often achieve financial freedom even faster than high-salary earners. Financial freedom doesn't mean being rich. It means your passive income covers all your expenses. Even if you're not technically a millionaire, you're financially free if your investments provide for your lifestyle. Given Australia's high taxes, real estate plays a major role in tax efficiency and wealth preservation. It's no coincidence that some of the wealthiest Australians are in property and investment. So, how many properties do you need for financial freedom? For most people, 1 or 2 investment properties may help cover part of their expenses, but that alone likely won't achieve full financial independence. It might allow you to reduce from full-time to part-time work. But to be financially secure without worrying about cash flow, you typically need to own and hold at least 4 properties over the long term. Why 4? Let's take a look at this data together. According to the latest figures, the average annual income in Australia is $73,434 Australian dollars. For many people, earning $100,000 per year in passive income through real estate investment is considered financial freedom. To understand how to achieve this, we can work backwards. If our goal is to earn $100,000 Australian dollars annually, and we assume an average rental yield of 4.73%, based on data from March 2024 across the 8 capital cities in Australia, then we need a net portfolio value of about $2.114 million Australian dollars. This amount comes from dividing $100,000 by 4.73%. This net portfolio value of over $2 million refers to the total value of your real estate investments after subtracting your outstanding mortgage debt. Only then can it be considered your true net portfolio value. Let's say you had $2 million Australian dollars in net assets. You could achieve this by owning 4 properties worth AUD 500,000 each. But what if you don't have $2 million in cash to start? That's when time becomes your most valuable ally in building wealth. Looking at Australia's property market growth over the past 20 years, if your current net assets are worth $1.1 million, even with a conservative estimate, those assets could grow to $2.11 million over the next 20 years. You might be thinking, but I don't have $1.1 million in assets. In that case, there are 2 options. Option 1. Invest in areas experiencing rapid growth, such as Perth or Brisbane, which are currently seeing annual increases of 10 to 20%. With that kind of growth, you might not even need 20 years to achieve a 190.5% return on investment, based on historical data. Option 2. Start your property investment journey 20 years earlier. If you had started 20 years ago, you would have only needed $580,000 in net assets to reach $1.11 million today. Given the same growth rate, another 20-year cycle could then bring your portfolio to over $2.11 million. In this way, you'd be able to generate $100,000 annually in passive income. And even if your properties don't appreciate as fast as those in Perth, as long as you get into the market early enough, you still have the potential to build significant wealth. possibly becoming one of Australia's wealthiest individuals over time. Those who know me know that I only invest in real estate. I don't invest in stocks, Bitcoin, or term deposits. As someone born in the 1990s, I chose to put my assets into Australian real estate early on, so I could benefit from multiple 20-year growth cycles. Since I'm in my 30s, I still have time to go through at least 2 full 20-year cycles, each offering a potential 190% return. And because these cycles build on one another, that's compound growth, letting time do the work for me. Eventually, as my assets grow, I might revisit other investment options like stocks, term deposits, or mutual funds. There are plenty of choices. But time doesn't wait. In real estate, time is both our best friend and our greatest enemy. The right time to buy isn't when interest rates fall, it's as early as possible. What do you think? If you're interested in investing or have questions, feel free to leave a comment below. If you'd like to book a one-on-one consultation, feel free to WhatsApp or email me, or visit my website at investwithalison.com to schedule a time. Thanks for your time, and I'll see you next time. Bye-bye.